Hello everybody, today I want to talk about a Chinese company that is not often talked about on YouTube. Everybody is talking about Alibaba, Tencent, Pinduoduo, JD, Baidu, etc. But nobody is talking about this company, which I believe will be a multi-bagger in the long term, which has a lot of upside in the long term. And the company I want to talk about today is Kweichow Moutai. Not a lot of people know this company. This is a company that is not available on all the brokers, but I think the moat is maybe the best I've seen in China. The quality of the business model is maybe the best I've seen in China. And when the Chinese stock market is rebounding, Kweichow Moutai is not rebounding. This creates a gap, and I believe Kweichow Moutai is undervalued right now. So I will maybe buy it. I will maybe buy this Chinese company because of the quality of the business model. You will see this is absolutely great to have. So what do I want to do in this video? First, introduce the business model, what they do, the history, because the history is big. I mean, the track record is quite important for Kweichow Moutai. We'll talk about the margins, the fundamentals, how they make money, the kind of products they have, and the capital allocation decisions they have. What do they do with their free cash flow, and whether it's a good moment to buy now. We'll talk about the valuation. Okay, so this is a good plan. Take your time. I have some coffee, I have some water. We'll just enjoy the show now. In case this is your first video from this channel, welcome. My name is Christophe Noor. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year, investing the Warren Buffett way. And I believe this investment is a Warren Buffett kind of investment, Charlie Munger kind of investment, because Monish Pabrai and Guy Spear and Monish Pabrai's daughter invested in Kweichow Moutai. They have discussed it for a while, and I believe Monish Pabrai invested in this stock in 2017, and he sold on the way up. But if I remember correctly, Monish Pabrai's daughter still owns it because she believes in the potential. So just so you know, this is not a hidden stock. Some super investors are buying, have been buying in the past, and we'll see if they will buy again in the future. This is a company with a market cap of $200 billion, which raises the first question: why isn't this company available on all brokers? Yes, they are only tradable in China, but in the past, I mean a couple of years ago, it was the biggest company in China in terms of market cap. So it's a big company, pretty famous. And if you are Chinese, or if you have some Chinese friends, Chinese family, you know this company very well. Let me read the description of the business model, and we can start talking about how they make money, the fundamentals of the business, okay? Kweichow Moutai is one of China's leading liquor producers. The company was established in 1951, and its headquarters are located in Moutai town. I don't know how to pronounce this one, but it's a province in southwest China. Its flagship product, 53-degree Feitan Moutai, is known as China's national drink and has been consumed during many high-profile historical and political events. This company has a historical background. This company is very famous. Their drinks are very famous. Given its remarkable pricing power, premium product quality, and unparalleled brand strength, the company achieves the industry's highest retail prices and profit margins. You will be shocked to see the margins later, especially if you compare this to other liquor companies you can find in the West. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. The way they make money is by selling liquor. The way they create liquor is very simple, and as a Frenchman, I understand the business model very well. They have the best liquor you can find in China, and the only way you can make this high quality beverage is on a specific land in China. Guess what? Kweichow Moutai is the only company available on these lands. So the moat the company has is a geographical moat, I would say. Nobody can copy the quality of their beverage because nobody can copy land. You can't create land, similar lands. And in France, we have the same thing with champagne. If you are a company delivering the best champagne ever because you have the best land ever, well, nobody can steal your land. Nobody can steal your quality of products. This is the same thing for Kweichow Moutai. You have the best taste because of the land. Okay, so I just wanted to assess the first point of the moat because as the best liquor beverage, they can enjoy pricing power. Look at the margins. You have a business model, beverage company, with a gross margin of 90%. Okay, you don't have this with companies in the West. Operating margins of 70%, net margins of 50%. Okay, so a business that has grown meaningfully with very high margins. Let me show you what I mean. The gross margins in the past, the operating margins in the past. Look at this. This is not one specific profitable year. For the past 10 years, gross margins have been higher than 90%. And the operating margins were higher than 50, 60%. We are talking about an extremely profitable business model. They only have a few facilities on specific land in China, so the volume is capped. You can increase the volume a little bit, but most of the alpha is produced by the pricing power. You increase the price of the bottle. When I was working in an investment fund, I worked at the pricing power for each year of this company. Let's say the average price per unit is growing a healthy amount, let's call it this way. If I look at the revenue, the net income of the business, you will see that everything goes up and to the right. Look at the revenue here in blue, literally up and to the right, with a nice acceleration since 2016, and I will talk about this later. Same thing for the net income, literally up and to the right. When other Chinese companies were suffering in 2021, 2022, 2023, because China entered a bear market, bad economy, I would say, Kweichow Moutai is still thriving because the company is so entrenched in the Chinese culture. So same thing, you don't need much capex, so your operating cash flow goes up and to the right, and the free cash flow is almost the same. You don't have any capex for this company. No reinvestment. That's a second part of the quality of the moat. This company has the branding, has the best moats, best liquor owners for Fortinet, the best moat, the best liquor, and they just don't reinvest. All the cash is not reinvested. They don't need capex to grow. Let me show you the evolution of capex over time. If I want to compare the cash from operations here versus the capex here, look at what you have. In blue, you have the operating cash flows for the past 10 years. And in orange, you have the capex. In this AI ramp up, capex ramp up from the Magnificent Seven, well, that's good to see. Some quality compounders that are growing without capex at all. Okay, what about the balance sheet? The company has no debt. No debt. And it is filled with cash. Don't mind the big drop in 2017. It's an accounting change. Okay, let me show you what I mean. Let me show you this and let me show you this short-term investments. Here we go. Before, maybe the table is not clear. Before, all the cash and short-term investments were in only one line. This is the reason on Guru Focus you see such a high cash balance. And then you had an accounting change a few years ago, and you had to separate the real cash from the short-term investments, short-term treasuries, for example. So since this differentiation that created a drop in cash, which is not true actually. If you sum this up, this is the cash balance. Okay, so no cash problem, no debt problem. The company has not lost all its cash in 2019, not at all. It's just the way it is. This is just the balance sheet, and the company is filled with cash. Actually, we are in a safe zone The company literally doesn't have a financial problem, is enjoying very, very high margins, sustainable margins, with the best quality beverage. I mean, how good do you want the business to be, right? Let me show you something else. You have a ROIC, return on invested capital, that is averaging 30% every year. And now the next question is, what do they do with all this cash? They produce healthy cash flows. What do you do with cash? This is your answer. All the cash, 100% of the free cash flow, is used to do dividends. No buybacks. This is a Chinese company, but dividends. They just love dividends, and they believe this is the best use of their cash, excess cash, to reward the shareholders. So what has been the dividend yield over the years? As the free cash flow is going up, and now as the stock is going down, look at this, since 2021, the stock has gone nowhere, declined a little bit. The dividend yield has grown. Now you have a dividend yield of almost 4%, which is great. Do I have maybe other metrics here? Maybe I want to check the payout ratio. I don't see it here. Employee dividends. Dividend payout ratio, dividend yield, fair enough. This is your payout ratio. In the past, it was 50%, and now it has gone up. Yeah, they just want to use all this excess cash to reward shareholders again and again and again, because as I told you before, the company doesn't need much capex. And now let me show you the dividends of the company. Here you have an increase in dividends over time. And what is very new for this company, when it comes to capital allocation, are buybacks. Seems like for the first time ever, Kweichow Moutai did buybacks. Maybe it's a sign that management thinks the company is very cheap right now. Maybe they want to reward shareholders, and maybe they will start a buyback program. I mean, it's a start, and maybe they will continue in the future. If you go on Guru Focus on a quarterly basis, do you see it? You don't see this. Okay, quite hidden. This is why we use different websites, right? But on Fiscal AI, you see they have started a buyback program of 5 billion, I would say. Yeah, maybe this is the beginning of a new era for this company. Given the low valuation, they can start a very promising buyback program and continue the dividends, continue the buybacks, and it will be very rewarding for shareholders. Okay, what do you want to see more? Maybe the growth. Okay, fair enough. You have the revenue growth rate. This is the revenue growth rate for the past, what is that? Let's show you the past decade. Here it is. You have a company that has thrived in 2016, 17 with a growth rate of above 20%. It was a crazy year. And now you have a stabilization with a growth rate between 10% and 20%. You are talking about a sustainable business, and now the stock is not shooting to the sky because the growth rate has decelerated a little bit. I don't see this as a major issue, by the way, because of the way the Chinese culture is. Now let me talk about the track record of the company, because it's quite rich. In the past, this liquor company had high prices. Like, it was kind of expensive, pricey to purchase a bottle of this liquor. It's like a vodka, but with hundreds of dollars. You can go up to thousands of dollars for one bottle. And it was a great gift for the Chinese government, right? You want to bribe people, you buy a liquor bottle, and this is great. You have a friend now. And since 2013, China has a new leader, and they wanted to hunt people that did this kind of bribery. And this is the reason they completely attacked Moutai. And it's not good to be attacked by the Chinese government. We've seen this with many other examples. When the Chinese government doesn't like you, you're screwed. So they were screwed, and this is the reason why the PE ratio dropped meaningfully. I mean, the business model was under attack, I would say, by a huge amount. And let me show you. Maybe I will have to navigate to other websites to show you what I mean. Fair enough. Let me open Stock Unlock here. By the way, if you want to use Fiscal AI or Stock Unlock, you have discount codes in my description. So it will get cheaper if you use my links, okay? Kweichow, Moutai. First thing I wanted to check before was... Oh no, fair enough. Okay, let me go to the free form and let us check the PE ratio, price to free cash flow. It will be the same. It will be exactly the same. Price, PE ratio here. Let's see the PE ratio for this business over time. What you see is in the past, before Xi Jinping came into power, the PE ratio was 30, 25, 25. And with this crackdown on bribery, it went to PE ratio of 9. For an excellent business model that is thriving, entrenched in the Chinese culture. PE ratio of 8. Yeah, obviously, if most of your profits are due to bribery, you are not in a good place at all. So the company completely pivoted and they completely avoided the bribery stuff. They wanted to reduce prices a little bit, play around with distribution, volume, and the culture of the company changed a little bit. And since then, since 2013, 2014, you don't have much bribery with Kweichow Moutai. It has actually worked, and accordingly, the sustainability of the business model improved over the years, for the past 10 years, and the PE ratio improved accordingly to a more reasonable PE ratio of 25. And then in 2018, you had a big crash for China in overall, and the peak of the bubble was in 2021. Next question, what happened in 2021? Nothing. It's just the way the stock market is working. Sometimes you just go up meaningfully for no reason. And the stock peaked at a PE ratio of 70. Since this peak, the stock has dropped. The stock has dropped, but as I told you before, fundamentals continued to improve. And the valuation was dropping like a rock, actually. And the PE ratio went from 70 to now 20. Cut in 3. Even more than this. You don't have a lot of these examples where you have a valuation that is dropping like a rock, but the company is still growing. If I show you the free cash flow of the company, that is still growing. Okay? So actually that's very good news for us stock pickers because we can find these kind of opportunities. We are literally in this broken stock environment when all the fundamentals are going up and to the right, but the stock is going down and to the right. And this is perfect for us. Actually, I wanted to show you the investor presentation. On Fiscal AI, I'm afraid we don't have it. We have a report in Chinese. You can have the report in English if you want. Kweichow Moutai investor presentation. Let me see if you have some slides about what the business model is. You have some recommendations. Well, I did some first data work on this one and talked to many analysts on Wall Street. But I'm sure if you browse on the internet, if you're a little bit curious, you can find people that have done the work. You have articles on value investors clubs that have done the work before. So let me scroll this a little bit so you can get an idea if you have some nice charts. But I think everybody will tell you the same thing. Kweichow Moutai is a leader with the best-in-class product, a brand that is extremely good, and nobody can disrupt this company. AI will not disrupt Kweichow Moutai. Digitization of the world will not disrupt Kweichow Moutai. Investing in Moutai is investing in, I would say, in the Chinese consumer. If you believe the Chinese consumer will be more well off in the next 10 years, this is maybe the most profitable bet you can have. the most profitable investment you can have. And over the past few years, the company have shifted to more digital sales, direct to consumer, actually. Let me scroll down a little bit. No, I mean, you have a lot of information here. People that did their slides are very good. They know what is important and what is not. Yeah, they recommend to buy, obviously. You see these kind of bottles, plastic bottles, it's very cheap for them to make them. It's very cheap for them to make them. I went through the investor slides, the official documents, very, very efficient, I would say. And here is the track record of the company, depending on the growth rate. Investment activities hit, look at this, in 2013. A slowdown in sales hit by China's anti-corruption campaigns. Fair enough. And then in 2018, the whole Chinese market went down. China's financial market deleveraging. And now, since 2022, you have a slowdown, China lockdown, slow recovery post-reopening, Fed rate hikes, China-US decoupling. That's not very true. I mean, most of the sales from this company are from China. The tariffs and trade war with US has no importance whatsoever for Kweichow Moutai. What's next? No, nothing. Okay, fair enough. Actually, you have plenty of information. And if you want to see the annual report and do the work yourself, good luck. You will have 200 pages of a report in Chinese, which is, Chinese accounting. This is quite different. Hopefully, I have a master's degree in accounting, so I understand the differences that are hidden in the reports. What the annual report will tell you is how profitable the business is. It's actually quite shocking. They don't have any expenses. They don't have many employees. They don't want to grow at all costs. They just want to sell more bottles, increase the prices, and in the next 5 years, you can know almost for sure the trajectory of the business model, which is something I love when I invest in stocks. I want to invest in things that will not be disrupted, that you can pretty accurately forecast. And Kweichow Moutai is a sweet spot here. Is in a sweet spot because you can know almost for sure the company will not go crazy. They will just sell more liquors at a higher price. And this is it. People will continue to buy this. Actually, you don't have much investor presentations. You have leaders, organizational structure. No, fair enough. Maybe you will find some websites in China and you can translate them if you want to continue the due diligence. I didn't want this video to be a deep dive on this one, just to give you a hint so you can continue the work. Actually, we have discussed this company inside the coaching program deeply, I would say. It's a very good business. It's a very good business, and now as the Chinese market is rebounding, this stock, because it's not tech, is not taking advantage of AI. They don't announce anything fancy with new chips, AI chips. They don't promise infinite capex when it comes to AI. So it's different from Alibaba and Tencent and all the rest, because nobody wants to talk about this. Nobody wants to talk about this company. Kweichow Moutai is a child that nobody loves, but it's a child that is very promising in the future. We are the lowest valuation we've seen since 2018, so 7 years. And if you look at the DCF, if you forecast what will be the growth rate of the free cash flow, well, it's pretty simple, right? Let me show you the growth rate of free cash flow in the past. Free cash flow change. You have, where is it here? For the past 10 years, what has been the growth rate in free cash flow? Well, let's look at the average. Let's look at the median. Let's see what we have. Average 36%, median 22%. Okay, so we are talking about a very growth-oriented business. Okay, it doesn't seem like it, but it's very, very true. Very true. Okay, what will be the growth rate in the future for this company? Well, you can guesstimate it will be, if you want to be optimistic, you can put 20%. and if you want to have a price to free cash flow of 25, this is a stock that is deeply undervalued right now. Let me put 0 here to be more reasonable. Even if you put 20% growth, I mean, let me remind you, they have grown free cash flow at more than 30% per year, right? If you put this kind of growth rate and a price to free cash flow of 25, we are talking about a company that is discounted by 50%. And if you buy right now, you can expect a CAGR of 19%. See how easy it is. If you think the growth rate will not be 20%, but the growth rate for free cash flow will be 15%, you are still buying a cheap quality compounder that, if you buy right now, can generate 15% per year. Sometimes investing is quite simple, right? You just have to find one like this and hold. And actually, if the Chinese rebound continues, if you have more craziness when it comes to AI investments, etc., and if Kweichow Moutai still drops, I will buy. I will open a position. I will open a position because you have a massive bazooka stimulus in China right now. Maybe you are very well aware that super investors, including David Tepper, are talking about buying everything in China, big stimulus. Well, since the big stimulus, look at this, the stock from Kweichow Moutai rebounded and then went down again. Everybody is going up in China. The tech heavy businesses are going up. The stocks are going up. The promises are going up. Everybody is promising the moon. And then Kweichow Moutai is going nowhere. This is a company that is quite boring. And I believe that if you buy right now, you can expect a very nice return. So I will keep you updated. But most likely I will buy. If you have the current market and nobody loves Kweichow Moutai, maybe in a couple of days, maybe in a couple of weeks, I will buy Kweichow Moutai. I think it's definitely the sweet spot of being a quality compounder available at a fair price. So yeah, pretty interesting. I will keep you updated. If you want to continue the analysis on Kweichow Moutai, the internet is free. You can use whatever research you want. And don't hesitate to use Fiscal AI and Stock Unlock using my links in the description. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.